Go ahead.
All right, I'll like to call to order this meeting of the Budget and Finance Committee of the Town Council. We'll start with an approval of minutes from the October 7th, 2025 meeting.
Motion for approval?
Second.
All those in favor?
Aye.
Aye.
Aye. Okay, 3-0. Moving on to public comment. Any comments from the public?
Be allowed to discuss the tax allocation ahead of the item or within the discussion of the item?
Not within the discussion of the item, but you're allowed to state whatever you'd like to now.
Okay,
And then there's also a comment period at the end too.
okay.
Don't
I'll
wait.
wait till the end.
Mark, you all set?
I'm good. I'm gonna wait until we have things.
Okay. So we'll move on to D, discussion. We're gonna start with a review of the audit process. I don't know who's.
Lori can introduce.
Yeah, so this is Don Piet. He is a partner at Roselli and Clark.
Evening.
Well, evening. He's in the process right now of reviewing our financials. Was in the office 2-3 weeks ago with his team. They come in and they, have send us a checklist. We get the departments prepared. And some of the things that they're looking for, they look at the treasurer's office, they go in and look at their bank books. Go into the assessing office, they look at the commitments and the processes in there. They come into the accounting office, they look through the accounts payable, the warrants, the payroll warrants, all the capital expenditures, all kinds of information. They look at the contracts to make sure that anything, they have their ways, and he'll go through that process. But they spend a week at the town going through the various departments, including the town clerk, and going to there. Water, sewer, police, fire, anything that might be on their checklist for the year. I mean, they don't do that every year, go into every single office, but they pick things randomly, and or if we ask them to focus on something, they come in and do that. So this is Don, and he's the last year, this year, we've worked closely together, and he can explain the process and then answer any questions that you might have.
Yeah, thank you for having me. Don Pyatt from Roselli and Clark. Give you a quick overview of financial statement process and our audit process, and then I'll kind of get into some of the sections of the financial statements and what we do. So the purpose of a financial statement audit is to determine that the town's financials are fairly presented. Our audits are not designed to detect fraud. However, there are certain procedures that we do. We have discussions with staff. Internally, we have a brainstorming session to kind of come up with areas that we may need to look at firm-wide across all clients. But overall, it's for the financial statements themselves, not here to detect fraud or anything. The audits are highly regulated, so we have to abide by auditing standards from the AICPA, Government Accountability Office, uniform guidance for our federal grant audits. So there's different standards and compliance supplements for each one of those that we have to follow depending on what we have to look at. Federal grants are determined each year based on expenditure. So some years we might not even have to look at a federal grant, and the last 2 years we've had to because you've met a certain threshold. So we perform risk assessments for each of your major sections. So we take a look at cash, receivables, debt, fixed assets, and we come up with our risk assessments and our audit approach based on those assessments, and then we perform our audit procedures. Each year we do update with discussion with Lori and other staff your internal control procedures. So, or not the procedures themselves, but the areas of major transactions. So your receipts, payroll, vendor payments, each one of those is documented on how the process works from start to finish. From approving an invoice to getting it paid, from payroll, reviewing timesheets, with document from each office what that process is. And then we'll go through and we'll go from start to finish, take a transaction from each one of those and make sure that the internal controls that we documented are being followed based on those procedures. And then for further testing, single audit testing, this year, we take a look at disbursements of about 40 transactions. Two things we're looking at is control and compliance. So within control, we're trying to take a look at the invoice is valid, being signed off by the department head, is it on a signed warrant? For compliance, if there's certain grant requirements, we'll take a look for the compliance there. Taking a look at contracts for any projects or disbursements over 10,000, you're required to go off for procurement, so we make sure we check that. Within receipts, we'll take a look at your tax recap, take a look at, compare that to your assessor's warrants, trace that through to your postings to your receivables. Make sure that each step makes sense, it agrees to what the town voted, what the town went through and got certified for the tax recap process. And then for payroll, we take a look at about 25 transactions, and we will try to cycle through departments depending on the year. Last year, we took a look at police transactions. This year, we took a look at fire transactions. Same thing, we're looking at kind of control and compliance there as well. So again, timesheets are being filled out. They're being signed up by department heads. They're on a signed payroll warrant. Taking a look at your pay rates and, for those people that we tested, do they agree to your collective bargaining agreements? Like I said, those rotate every year. Kind of depends on if you have a single audit or not for the federal grant. So we have to test if you had a major program, if they had payroll. Otherwise, like I said, we'll cycle through departments just to kind of get coverage from year to year. That's kind of the overview of the process of planning. I was going to get into kind of each one of your balance sheet sections for a minute, unless you guys have questions that you want to ask now. I don't know what makes more sense to you guys, but
none right now.
I can just run through now.
Yeah.
And then, okay. So when Lori does her financials each year, she submits to the DOR, or DOR balance sheet, and they're on a cash basis. So the things that are reported that we're auditing to start with are items like cash and receivables on the balance sheet. So cash, we're going to visit Scott in the treasurer's office. We're sitting with Lori. We want to make sure that Scott and his crew, they're taking all their bank statements each month, reconciling to their cash book, and then that they're working with Lori to make sure that those transactions from their office are getting posted to the general ledger timely, appropriately. And then again, they're reconciling monthly. Anything that is a reconciling item can kind of be taken care of quickly. If you let these things go for a few months, then it's more of a project trying to figure out how do you fix it. Same thing with receivables. Each month, whether it's real estate, personal property, motor vehicle excise, water, sewer, a reconciliation is performed between what the collector balances are and what the general ledger has. And same thing, items that are detected, could be payments misposted, they'll go through and make those adjustments. And we're looking to make sure that those, one, talk to them to see, are they being done somewhat close after month end? What's their timeline on it? And ultimately, at the end of the year, are they reconciled? With receivables, in addition to what she's reporting, there are audit adjustments that we have to go through to make for or propose for the financial statements. So we'll take a look at your receipts after year end, anything related to, we're doing 25 right now. So if we look in July and August, we're looking at what was collected for 24, 25 real estate, personal property, and there's an accrual adjustment that we'll book. And all our adjustments are discussed with Lori and reviewed before we issue our financial statement. So same thing, we do another one for unbilled water and sewer, just based on timing of when bills are done. Your first quarter bill may include readings through June. So there's an adjustment there. Capital asset, one of your biggest items on your full accrual financial statements, that is not maintained really on within Munis. That is accumulated and reported based on schedules in a system outside of Munis. We assist in that, and we have software that we track the town's database, basically. And what we'll do is we'll come in each year and we'll speak with Lori, take a look at your general ledger, identify all your major capital expenditures for the year, capital projects, take a look at your vehicles and other equipment that are being purchased, and we'll assist in preparing that additions list for the year to put into your software system. In addition, we'll take a look, we'll analyze depreciation year to year to make sure that all makes sense for financial statement reporting and that all the categories are appropriate. Those are, I'd say, probably the biggest items on your balance sheet when you're looking at the financials. And again, getting back to UMIS or the DOR balance sheet reporting, primarily what's on there is your warrants payable, accrued payroll, short-term debt. So warrants payable and accrued payroll, usually that occurs, as you know, you have a 15 days after year end to get your last few warrants processed that are related to the prior year. So there's usually a timing issue, and that's a warrants payable adjustment that's usually made. So we'll take a look at the number of warrants you processed. The 3 or 4 warrants that were processed should tie out to what you reported on the balance sheet. Same thing with accrued payroll. Short-term debt is, I wouldn't say slightly easier, but we take we work with Scott. We get anything that he has for his debt issuance documents. Make sure that ties out to the general ledger, and then from there are other financial statement adjustments that aren't on the DOR balance sheet that we assist in preparing the financial statement, footnotes and adjustments. Long-term debt is one of them. We go through procedures tying out all the payment by entity, so government-wide, water, sewer, make sure all the payments, balances, any bond premiums are allocated appropriately, and then assist in preparing those financial statement disclosures. Compensated absences is another item that's not, it's not in your financial system as a balance, but it's an audit adjustment where Lori or her staff prepares a listing of all your employees, sick and vacation liability at the end of the year, what your number of vacation days, sick days are. And then, you take a look at the collective bargaining agreements to determine what the buyback liability will be upon retirement. So we obtain that listing, then we go through your collective bargaining agreements and make sure that, the percentages or allocations are appropriate and agree to those collective bargaining agreements. And then we propose an audit adjustment for financial statements. And then the last two are probably the big ones that you guys probably talk about somewhat often. OPEB and pension, other post-employment benefits, that's done based on actuarial valuation. That's performed every 2 years. A full valuation is done. Payroll department or payroll in your office, right? Yeah. So payroll will provide a census data file to the actuary. Scott will send the investment balances, and then the actuary will do their thing to come up with that, $50 million liability. Every 2 years, we obtain that census data. Then we sample the data, tie out the values, dates of hire, age, medical plans, to personnel files, to retiree files to make sure that is accurate. Pensions done for Plymouth County Retirement by a separate auditing firm. We essentially rely on their audit report. We obtain it, we take a look at it, make sure that they've performed their audit based on the standards and procedures we'd expect. We take a look at the balances and the activity to make sure that all of that is consistent with what we'd expect as well from the pension side. And then there's a number of entries for the net pension liability, deferred inflows and outflows, and pension expense that get layered into your financial statements. If you take a look towards the back of your financial statements, it's probably at least 10 to 12 pages worth of footnote disclosures for pension and OPEB. So there's quite a bit of work to do. But that I think pretty much covers process and kind of what we do for your balance sheet sections and the preparing of your financial statements. So I'd be happy to take any questions that you do have.
Can I just ask an initial question, if you wouldn't mind just giving a quick summary about your firm, like who you are, how many seasoned towns you work with, how long have you been working with Bridgewater?
Oh yeah, so I'm with Roselli and Clark. They've been the audit firm here for quite a while. I'm not sure how many years. I've been with the firm for about 3.5 years. Currently became a partner in the firm. I've been doing this for about 20 years between auditing and being a finance director in another community in Massachusetts. We have, I believe, back off the top of my head, we have definitely over 100 municipal clients, cities, towns, school districts, special purpose districts, water, sewer, redevelopment authorities, things like that. I believe we have about 12 or 15 accountants that are in the office. Majority of them CPAs that are on our teams. Not sure if that covers it.
That's good. Thank you. We'll put it up to. Any questions there?
I have just 3 quick questions. So the last audit, it showed that the custodial credit risk to cash holdings, we only had about 29 million covered out of the 42. Is that what you talk about when you talk about risk, that we should have that all covered?
Oh, you get into some in-depth questions.
Yeah,
That financial statement disclosure, we're disclosing what you have covered. I'm not sure if we usually opine on what percentage you should have covered. I think that's a town decision and, what's comfortable for the treasurer and Lori and the town as a whole.
okay,
It's not unusual to have accounts that aren't insured or collateralized above the FDIC's 250,000. But I think that's more of a town-to-town decision.
okay, because there's another risk with our US government obligations to corporate income securities. Because these securities are uninsured, unregistered, and held by counterparts, but the town doesn't have a formal investment policy related to custodial credit risk. Is that something we should look into? Who does that policy? You guys have policies that we go under?
Do we have them
Well,
specific?
because it says the town does not have a formal investment policy related to custodial credit risk.
I don't believe you do have a policy related to that. So we're just noting that in financials that there is not a policy.
Right, so are we at risk? Because, I mean, you guys make it sound like because our securities are uninsured, unregistered, and held by counterparties. Is that a risk for us?
I don't believe so. I'd have to get back to you.
Mary, I wanted you to hear from him first. There's many communities that don't have policies regarding that as well.
Well, I just
No,
figured since the auditor actually put in the report, I was wondering how important it was.
Yeah, I mean, a lot of these are standard footnotes
Okay.
that are their massage and made to fit each community. So if you guys did have a policy, that would not be in there. I'd say the majority of my clients don't have a policy.
Okay, well, I was just wondering.
It's just for financial
Yeah,
statement.
Well, I
purposes.
saw it in there, so I figured. The other thing, am I understanding the propriety funds correctly? They provide a service. You charge them like the water department.
Proprietary funds, yep, they're
Yeah.
business type funds, so your water and sewer. They're
Okay,
essentially supposed to run like a business, so you're providing water to your residents. The user charges that you charge to the residents should cover the cost of that service.
so could we put the ambulance fund under that kind of fund? Because they charge for ambulance. And, they provide that service and they get the money back.
I don't think I've ever seen one.
But would it fit the description? Would it qualify?
I don't think so.
Okay,
Usually enterprise funds are utility related.
okay,
There are some communities that have like a recreation enterprise fund, or I usually see them with skating rinks. They might have a skating rink enterprise fund. It's specific to that one building. Yep, golf is one.
yeah,
In golf, you can have enterprise funds. There's a lot of different ways depending on how you're operating golf courses. So they're either enterprise funds or what your ambulance is, receipts reserved for appropriation. So the receipts that come in are put into a specific fund. You can't, Municipal Modernization Act, I think, changed that, but really the money goes into that fund and then town meeting or town council should then appropriate the money from that fund for operations.
okay. Thank you.
Yeah, the enterprise fund that would be interesting. I don't know how you'd make that work, but again,
Well, I was just
Normally it
thinking,
is-
because, like, the water department's a department, the police, the fire department's a department, but they provide a service that they actually individually get paid for, the ambulance, so I thought,
yeah, a lot of times when you look at it, unless you can identify who specifically works on ambulance only.
Yeah.
Now, here, is it just EMS? Or
Well,
do you
we
have
have EMS
firefighters
and
and
fire.
paramedics? So the
they're all
community,
paramedics.
in the
they're all-
community I worked in, they were all firefighting paramedics.
That's how they
There's
are here.
No way to identify who's working just on an ambulance or who's jumping in the fire truck, right? So
Yeah,
the ambulance is part of the fire department. And that's, that's why that receipts reserve for appropriation account works pretty well.
okay, well, thank you.
Yeah, you're welcome.
Do you have certain guidelines for stabilization funds for communities? So for example, we're talking about our budget resolution
Mhm.
later on in our meeting, and we target about 10% for stabilization. Are there certain guidelines that you have for not only that fund, but other stabilization accounts for communities?
So overall, the DOR and GFOA, Government Finance Account Association, GFOA,
GFO,
they do recommend 10 to 15% in reserves. So in your financial statements, you'll see footnotes related, and we talk about that, or more in the MD&A. You'll see that in the general fund as unassigned fund balance, and then that's compared to your expenditures to kind of get an idea of where you're at overall. But yeah, so 10% between your unreserved or unassigned fund balance in the general fund, plus all your stabilization funds, ideally would be somewhere between 10 and 15%.
Okay. But everybody right now is under funded on OPEB, right?
Yes, the only places that I see that actually have an OPEB asset are life plans. Usually because they have lots of excess cash and they contribute heavily into their OPEB liability. But for the most part, off the top of my head, I can't think of any that are even close to funded. Except for maybe Wellesley at one point was close, but the market hit.
Okay. Thank you.
Yeah, you're welcome.
One of the things you didn't highlight were the schools, and I know they have a separate audit process. Can you talk a little bit about what that looks like in terms of your work with that?
Yeah, there's really not much we do with the school. So Bridgewater Raynham is a separate legal entity. They're governed by representatives from both your towns, and they come up with an annual assessment. Yeah, I don't know the exact details off the top of my head about, usually it's enrollment, and they'll assess you their operating and capital portions based on your enrollment percentages normally. That's done by a separate entity from us. Again, it's a separate legal entity, so we really, what we'll look at is what you paid on the general ledger and tie that back to your assessment letters from the school. But for the most part, that's the extent of the work we would do with that.
Okay, I only ask because you mentioned Plymouth County for the retirement. You actually get their audit report and utilize some of that in your review, but you don't do something similar with the schools because it's
No, that's purely just, they're assessing you a balance, there's no liability related to it. That's something that you guys have to come up with as a budget figure.
Right.
And make that work. The Plymouth County, that's a retirement system. So you're contributing retirement withholdings in the employer's portion of that to Plymouth County to cover your workers for retirement. And so that's why we rely on a separate audit to obtain the right financial statement disclosures and reporting adjustments for your audit.
Thank you. A little bit about the process itself. So you are on site here at Bridgewater throughout the process for, what does that look like time wise? Are you here?
Usually about a week.
Week.
Usually about a week. We send out an audit checklist with pretty much everything that we'll need to either physically have or review. Lori and Scott and their teams upload to we have a secure portal that we request a lot of the documents to be uploaded.
Yep.
So
And that's ahead of time.
that's ahead of time.
Yeah.
And again, this time we ask for a lot of stuff. So we get a lot of it, and then whatever we don't get, we'll bother everybody while we're here for the week.
Yeah, I was gonna say, so actually, that's one of my next questions though. What does that interaction look like with staff and how much time does it take out of their sort of daily activities?
That would probably be a better question for them. But I mean,
I'll ask them when you're not.
yeah,
around.
I probably talk to Lori a couple times a day when I'm here. Scott, maybe a little less. This year, I think he had a few things towards the end of the week, so we talked to him the first few days, trying to get a handle on the cash and receivable stuff that we needed. Again, which was beautifully uploaded to the portal. So there was just more like clarifying questions. But I wouldn't say that we're in each individual office for hours sitting and looking over their shoulder.
It's more like email communications or.
I mean, yeah, sometimes I'll be sitting in this room or next door and I'll email Lori for something just because I know she's busy, and when she can get it to me, she'll usually respond in an hour or that minute. It depends on what she's doing. So, I mean, we try not to disrupt people's day or week.
Everybody
I
looks forward
only
to
look at
coming.
I only look at the assessor because we grab their warrants, we ask for a ATV letter. We're in people's offices as little as we need to, but a lot of times we'll get access to the warrants and invoices and stuff like that we don't have to bother them. As long as we make sure we put them back appropriately.
And so, from a timeline standpoint, I know you're here for the week. What does that look like? Just the timeline throughout the course of the year for the audit itself. So we initiate the process when you're on site, when final reports,
So
when.
the process, we usually don't start anything until the DOR balance sheet has been submitted to the state.
That's
We
the
could-
final, of us closing our books
Yeah.
and sending all of our records to the DOR. We just say, okay, we're approved, we got our balance sheet in there, and then they send us the list and give us a time frame, depending on their schedule, but that means our books are closed and we're ready to,
Yeah,
It's typically end of August, beginning of September.
Yeah, July, August, yeah.
Yep. So we'll find out, we'll send a checklist, again, stuff will get uploaded, and then we fit it in the schedule where we can. For the most part, especially a client like Bridgewater and Lori, who consistently has their stuff in pretty early, we try to keep a consistent audit timeline. So I think we were here in October, end of October, early November last year. So for most clients, we do try to keep it pretty consistent year to year. So again, we'll send out the checklist, we'll get some stuff uploaded. I like to try to look at your expenditures to try to determine if there is a single audit required, because then that'll be another set of checklists we have to set out and more to do. But then sometimes we'll have staff available depending on the week to start doing some data entry. But then we're usually here for a solid week, and then we fit in the wrap up of the audit. I'll probably end up doing it in the next few weeks, trying to wrap it up. So I think last year we had the finals issued mid to late December.
Mhm.
I'd probably expect the same thing for this year.
Okay.
So yeah, we usually get the financial statements out, and then a single audit has to be filed for the federal grants by March 31st. So depending on where we're at with that part of the audit, that might come after January 1st, but the financial statements themselves are usually issued sometime in December.
Awesome. Thank you.
And then they usually come in for an exit, interview and just, inform the council and have a
Right.
presentation of
Right, yeah.
what, of what, the financials look like and the trends that they're seeing in other communities and where we stand in all that. Balances.
Okay. We have a lot more questions about it. Okay. So, thank you.
I am
We're
I
not-
allowed to ask
No,
now?
no questions. No, we're just gonna move on. If you have a question, email the town manager and Lori to get the answer.
I just wanted to ask
I'm-
for golf.
Yeah, we're not gonna do any other questions. We're gonna move on to tax exemption. So, thank you.
Okay, all right, thank you.
All right, so moving on to discussion, item B, tax exemptions. I think we're picking up from where we left off in the course of the summer. I know we had talked, I think it was in June timeframe. We had talked about the HEROES Act, and I believe
There is a senior tax exemption, which I believe is reimbursable by the state. So that seemed pretty attractive to look into. And I saw an older presentation that you made. So I'd love to revisit that conversation as we kind of prepare budget resolution. 27.
Need that to get through the night.
It's on Zoom.
Oh.
Thank you. Did you want to do senior or veteran first?
Leave it up to you.
Well, veterans probably because you're more familiar with them, right?
I suppose so. I mean, I think we're all a little rusty now because it's been a few months, but
This one's-
I'm familiar with 22I, 22J. And then a little bit less familiar with the senior one.
Right, so the veterans, we did pass 5N, which was the same part of it. Like the seniors, we have the same seniors, and we earmarked $15,000, so that gives us 10 veterans a chance to go again.
Mhm.
And then we could do the 22I, which is based off the COLA.
Mhm.
So when I did this, it was 139 exemptions, well, we'll round it to 100,000. But we can keep the same numbers either way. Anyways, so it was 2.9%.
Mhm.
So that would have a liability for us as $2,874.
Yeah, that one was small. And it was J that was close to
Yeah.
$100,000.
So now the J, same thing, 99.1. It would, if we were to do 100%, it would be 99.1. And you don't have to do 100, you could do 10, 20, whatever you guys feel comfortable with.
Do we have the list of what different rates would be? I thought we talked about what, 50?
This would be increasing what they currently are getting. I forget the amounts.
So if we did only
So they
50,
can get, if you look at the next page, they can get 400, 750,
There it is.
1250, 1500, full. And it would be across the board. You couldn't say, I want to have a 10% veteran get 10% and 100% veteran get 1,000%. It would have to be across the board. So whatever number you would choose.
so the lowest number on this chart is the 22, with
Correct.
exemption level is 100.
You
What percentage is that?
say that one more
What
time?
percentage?
10%.
10%.
And there's other criteria too, but mainly they're 10%.
Okay,
Like some might be gold star, all different like criteria, but generally it's 10% veterans.
The 400, is that the current number or is that what we would be increasing up to?
That's the current number.
And so if we did 100%, it would go up to 800.
Correct.
Okay. So basically what the council is potentially considering is if we were to do a 50%, it would go up to 600. If we were to do 100%, it would go up to 800 and that scale could slide up and down.
Correct.
Okay.
can you change it like, say 2 years from here now? We want to change it to like 50%? If we're doing really good.
Yeah, because I know you can do that for other exemptions, like the one we'll talk about in a little bit, the elderly exemption. If we decide to go up to like 68 in age and we still don't get enough applicants, then we could take it back and go to 70.
Okay,
So I don't see why we
But
couldn't
you
do
have
it.
to do it and vote it before July 1 in order it.
yeah,
To go.
I was just thinking if the town was doing really well, then we could just up it a little bit. So,
Yeah, that's why we paused on it because we ran out of time in June.
yeah.
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 So I guess the purpose.
And they do
of
work
today-
together. They work together. So the 22I will work together with,
The J.
Yeah.
So they get
so if
two,
you get a 400 and then you get the COLA and it becomes whatever it is, say
Yeah.
410. And then you guys do 100%, it become 820.
Mhm.
Okay.
yeah, that's true too.
So there's, I think Blythe explained this, or maybe you explained this in the spring, that there's a little bit of interplay between the veterans exemption and the senior exemption, because there are some veterans that are seniors. So is there a certain like tipping point where certain veterans would be incentivized to take the senior discount as opposed to the veteran discount? And it would be beneficial or just more efficient for the town to kind of encourage them to do that because that's reimbursable by the state. So is there
Okay,
like
so I
a
do
dollar
have
amount there?
circumstances like that right now
Yeah.
that they may be eligible for the 400 or the 500, and I always let them know, you know. You can get $100 more, so go this way,
Yeah.
you know.
Do we know what those numbers are on the senior side?
I only know of two
Hmm.
that they're a veteran and also a senior,
Okay.
so he gets 400 versus a 500.
Hmm.
I don't think anyone else that I can think off the top of my head.
How big are the exemptions on the senior side? Like what, like, is it just
500.
500? It's just 500.
Across the board.
So if we were to do 100,
Or 175 for the 17D, but the 41s is 500, 17Ds are 175.
mhm. So if we were to increase the veteran, the 22J by 50% to go up to 600, presumably none of them would take the senior because it's only 500.
Mhm.
But you said you only have one or two.
One or two, right now, we only have four
Mhm.
$500 exemptions, four.
Four of them.
So if you wanted, do you want to look at the next page?
Sure, yeah, yeah.
And so if you go to the senior side,
160.
the first one would be similar to the 21I, would be the 17F, so anyone that is getting the 175, they would get whatever percentage of the COLA.
Mhm.
So that's similar to the 22I, so it's, you know, not a lot of money. I mean, everything's a lot of money, but not a lot of money. $357 for all the seniors who would have come off the overlay this year, $357, so.
What age do they have to be?
Mm-hmm.
What age does seniors?
70.
70, because I know some seniors asked if that age could come down.
Well, that's one of the options
41J.
that we can do.
We could.
Which is in here. Yeah.
Okay.
So that one's the 17E, which is similar to 22I. So if you were gonna pass one, you probably should pass the other. I would assume, I don't know, that would be up to you. And then we also have the 41. It's called exemption options, and this is where you can increase age, you can increase gross receipts, you can increase the whole asset limit. You can pick one, you can do them all. And then you can also grant the exemption up to 100%. So that would be the same as the 22J.
Mhm.
And so if you did this right now, the state reimburses us up to what we would have when you had 41s in 1988. So we could never go higher than 60, but we only had four. So that leaves 56 people that could be getting an exemption through the town with no cost to us at all.
If we lowered the age.
Well, yeah, I would assume would promote it better. I'm not quite sure
Only
why.
4 residents
I
in
mean, when I
town that
first got
said
here,
take
there
this
was a
exemption.
lot of exemptions. There were a lot of elderly people that either, you know, they grow older, or I mean, their income is too high now. Four
4 people
people go.
in the whole town.
Yes.
Do they get charged on the income tax for the credits for the savings that they get on here?
No, it's totally on their tax bill.
Okay, so there's nothing to do with it. I think that's saved.
So say we just, I'm sorry.
No, it's all coming off the tax bill, right?
Okay, yeah.
Yeah.
So say you decided to do 100% exemption on this. Right now, if we would have 60 applicants, it would cost 30,000 right now, and then it would cost, if you did 100%, it would cost 60,000. But the total cost to us would have only been 29,880 because they do up to, 60 people, and they plus $2. They give us a $2 too.
Oh.
Imagine
Hmm.
$2 per exemption, up to 60, which is another, $120 or whatever it comes to. Yeah, $120.
Paper.
And then there's a few others in here. We have the 51C.5, which is, it's a lot of work. It works like the 22J and the senior 41C, except it includes also the 17Ds and the 37As, which are the blind. But on this one, it is extensive research. You have to make sure that the taxpayer doesn't pay less than they paid the year before, and they can't be less than 10% of their domicile, assessed value, and it could also cost us a lot of money.
Yeah.
And then they also have the 41.5, which is the same thing. That goes off the circuit breaker. It's all in here. It's, probably too long to explain everything now, but the two that I would like to talk to the town manager about are the ones that I just said, which would be the 17E and the options for the 41C.
41C.
I'd like the town to maybe increase the income and the assets and the age. I thought maybe we could start at 68, because I don't know how many. I don't want you to come back and say, oh, 100 people apply instead of 60. So I don't know where we have to, and I don't know what your outcome is either.
Yeah.
Do you want more people than 60? Is there a limit?
Can we cap it at 60?
No,
Oh.
they're eligible,
Okay.
period. So
They meet that criteria.
Yeah, they meet the criteria, we can't deny them.
Okay. So, yeah,
So
we,
age and income.
Mm.
Okay.
okay.
Shelley and I did talk about, having a day or two, with Justin, like going down to the senior center. And
I think that
Say
would be
that,
really
advertise
good.
it.
and just say, hey, if anyone has any questions about this or.
They
"Hey,
have
did
a
you
lot
know
of
about
questions.
this?" Yeah, and they do.
Well, we usually do that once a year for SAVE, and we still, I've been doing that for a couple of years.
I think we really have to advertise. push
I mean, if you
Is
look
it
at the
in
income, how
newsletter?
low it is, 15,000, I
Yeah,
mean,
I think you have to make sure that it's on the senior newsletter. Because when I go down there, they ask me questions about this all the
and
time.
it hasn't been looked at since 1988, so obviously,
Time to look.
yeah.
That would be good. I'll push it for you. Right?
Yeah, I'm glad that we were
Yeah.
talking about this now. And the reason is because if we're gonna implement some of these policies, it's gonna have to be budgeted, especially that 22J seems to be expensive.
Yeah,
Yeah.
and that would come out of the overlay, which is, something that we have to
We have to
look at
yeah.
when we
When we're
approve.
doing the tax rate now, we have to look at that annually to see
Yeah.
what's, coming off of the tax.
Right now, we earmark 35,000 for the seniors and 15,000 for the veterans,
Mhm.
for the SAVE program, and then you know what else. And then you see in here what we already do for the other ones, so this.
Well, we don't
Multiply
even-
that by 2 if you want to do 100%, or
We don't even come close to touching that 15.
have we, have
That
we
we
had
earmarked.
15? Oh, it just happened this year, so I don't know. I'm not quite sure if we got it. I'll know next week when they give me their time sheets. I can get back to you if you want.
Good to know.
Yeah,
We gotta make a decision probably sometime this winter ahead of time.
Oh,
So
yeah.
we're not sitting here in June
Yeah,
Right.
again or whatever.
yeah, definitely, by the new year, hopefully.
And maybe if we do some kind of informational
That-
thing,
Yeah,
we
right.
could have a sign-in sheet to see like what age people are asking questions, so we could kind of get an idea of
Yeah,
how many, what's the age bracket that really is interested. But we would like to get anyone who's eligible to be able to take advantage of this. Same.
yeah.
Probably a hard market for people to advertise to.
Mhm.
So right now, how do you reach them reasonably?
Well, the senior center sends out their newsletter to all seniors.
Well, how do you get the newsletter?
She mails them.
So you'd have to have an email or you'd have to
She
be on.
has your
the website.
address. I think she looks it up with the town clerk. I don't think you have to be a member of the senior
She
center.
does,
I don't
she's
know.
correct. Honestly, you'll be surprised, in terms of turnouts, for example, when we had municipal aggregation, the one at Town Hall was the least populated, and one at the senior center is the most populated.
Yeah.
So they do turn out, and I
Yeah.
think what we'd have with Lori and Shelley is we're gonna talk about this a little bit. As Shelley mentioned, what we're looking at. We'll talk to Courtney.
Yeah, Courtney
Advertising,
knows,
and
she
be
really.
able to have some information or recommendation for the council. and move forward.
Yeah,
With Courtney and Greg too, who sees a lot of the veterans.
yeah, yeah. Well, thank you.
so, yeah, so I haven't proposed it with Justin yet, I just,
Uh,
Shelley's been trying to do this for many years.
I saw it last year. I was like, we gotta do some of this, so thank you.
yeah, thank you.
Okay,
Hopefully we can revisit again in January, February, but we'll keep.
Yeah, we'll keep talking about it throughout the winter.
And in the meantime, she tried to put, all the pertinent information. If anyone has any questions, feel free to reach out.
I think an order already went in for the veterans and not one for the seniors, so someone will have to sponsor that.
Yeah.
Okay,
Yeah, maybe we just sponsor that, just so we have it in the pipeline and then we'll have to pick it back up.
Okay. I don't know where it stands in the process of the queue. I know it's kind of like on hold, the veterans, I think.
The I and the J, I haven't
didn't
checked
get
with
it
Deb
in
exactly
time.
where it is. Yeah, we just kept it, I think we kept it at this committee level. I don't think we sent it back.
Yep.
yeah. But yeah, I'd like to see that go through.
All right.
Okay, you're welcome.
We're at two.
Yeah, I know. Let's see if we can get these as quick as possible. Need to, I guess. We
Yeah, we could always continue. I'm not opposed to that.
have a special meeting on the third too, right?
Yeah.
Is there anything that needs to go through tonight on here?
I have to chat with lawyer Justin, but the residential factor, we could discuss it, but we're gonna refer to advertising and that would be for a public hearing anyway. Transfer orders, do we need to get any of these through immediately?
One's for contracts.
Yeah. Yeah, you could probably,
I'd like to see the CPC go through. That's
Yeah,
for the
Yeah,
fields.
that'll be before you tonight, so you can get them done, the three orders. I think they're pretty, unless you have a lot of questions, but the three orders will be. The classification, this is just like a subcommittee level that you're gonna have a public hearing, you're gonna refer to advertisement tonight, next. Meeting, you'll have the public hearing that Shelley's prepared to do a full presentation.
Sure.
Today, she was just gonna kind of give you the short version so you could vote it and then maybe put it to your council level, but.
You want to start there because we have to refer it, so for the advertising.
All right, starting with order OFY 26030. Classification tax.
Justin introduced that, but does anybody want to?
What is it? Which one?
This is the residential tax factor.
Yeah, this is the one.
Justin sponsored this, so I don't know if anybody wants
Okay,
to talk on his
so
behalf.
I'm here to explain it. Residential factor. At a minimum, the town must determine a residential factor, which will determine whether the town will have a split rate for its residential class and commercial, industrial, and personal property classes. Although there is an option to provide a separate open space discount under the statute, as well as a residential exemption or small commercial exemption, I will only be discussing the residential factor. As noted, the town council must decide the percentage of the tax levy each class of real property and personal property will bear each year. And so a residential factor is adopted. The residential factor governs how much the residential and the open space classes tax burden may our residential property tax burden may decrease, and consequently how much the commercial, industrial, and personal property classes may increase. The adopted factor cannot be less than the minimum residential factor calculated by the DOR, which is 91.51% this year. And it represents the maximum shift allowed in the tax levy for the year and establishes the parameters for local decision making. I provided a calculation option table,
I
which
love this.
represents the shift range from 1 to 1.25 at increments of 5%. To illustrate the respective share of the tax burden
The 13.
and the anticipated tax rates for each class. Notice when there is a shift in the percentage of total taxable value between the property classes, it affects the total amount of taxes paid by each class. The higher the percentage of the total taxable value for a property class, the higher the amount of taxes paid by that class. Conversely, the opposite happens. The lower the percentage of total taxable value for the class of property, the lower the amount the taxes they pay. It is important to note that although the council is effectively choosing the SIP shift, it's really is selecting the residential factor. If the factor of 1 was adopted, the tax rate would be the same for all classes. This rate is determined by dividing the tax levy by the total value of the town and then multiplying that result by 1,000. The estimated tax rate for fiscal year 2026 is 1203. Our levy this year was 64,227,244, and our town value was 5,338,923,040. That comes out to 0.01203 multiplied by 1,000, tax rate 1203, which is estimated. The values were certified on November 3rd, 2025. If we decide to go with a residential factor of 1, the excess capacity for the current fiscal year would be 42,637.84. Also, the average single-family value for the 2026 year is 616,769, up from 593,992, which is a 3.8% increase. If the tax rate of 1203 is approved by the Bureau of Accounts, the average single-family tax bill for fiscal year 06 will be up 7,420, up from 7,027, which is an increase of $393 or 5.6%. CPA would be $124.33, an increase of $7.45. The average commercial value for classes 300 through 339 for fiscal year 26 is $1,143,575, down from $1,142,124, which is a decrease of 0.13%. If the tax rate of 1203 is approved by the Bureau of Accounts, the average commercial valuation for 2026 will be $13,740, up from $13,529, an increase of $211 or 1.6%. Fiscal year was 909, which was 7.2%, and the CPA would be 278.80, an increase of $4.23. Our debt this year was $6,117,445, and divide that by the value of the town, you get $1.15 rounded, so which would add approximately $708.61 on the average single family tax bill. That is an increase of $148 on the average single tax bill in fiscal year 25.
So we're just referring it to the town council because we're gonna have a public hearing and a presentation, right?
Mhm. Yeah.
Okay.
We'll make sure we get you the presentation probably next week, so you have some time to go through it and have your questions for the hearing.
That would be great, yeah.
Do you have to vote a residential factor, or you just send it on? I don't know, I thought they would vote.
I think that you were recommending or not.
Yeah, we would recommend or not.
Yeah, I would be okay with referring to advertising, but I'd like for us to continue to discuss this
Yeah.
for a recommendation. Are we able to do that?
You have to either not recommend it or recommend it tonight in budget. And then it gets referred to advertising at town council.
Why does it have to be done tonight? Why are we rushing? Does it have to be by a certain
Does this have to be set by a certain time?
Well, we gotta get the tax bills out by the end of the year, so the hearing will be 12/3, so yeah.
12-2.
Well,
I guess you can do it before 12-2 at your meeting. I don't know. I'm not sure of that.
Yeah, typically,
Can we do it on 12/17 or 12/16?
No.
No.
Why do we have to recommend it? I'm with you. Why can't,
I know. Why can't we just refer it for discussion at the town council?
why don't we just send it back to town council, no decision?
Yeah, we could do that.
Right.
Mhm.
Yeah,
I'm okay with that if you want.
Yeah,
yeah, because I'd like to.
Debbie, did you hear that? Can we just send it back to town council, no recommendation?
yeah, somebody has to make a motion.
I'll make a motion to send back to the town council with no
I
recommendation.
second
All those in favor?
that.
Aye.
Aye. Okay, 3-0. Do you want to go through FYO, order O FY 26031, transfer to prior year bill for the sewer fund?
I personally would just recommend to continue these.
You want to continue all of them?
Yeah, I don't feel comfortable.
I think we're gonna have to extend our time because it's getting busy for budget time, so it's 6 o'clock. I don't think it's gonna do it anymore.
Or hold them
Sometime
in
during the
between,
week.
yeah, or like in between, yeah, we made them meet weekly.
Okay. All right, let's vote to continue.
Make a motion to continue FY 26-031.
Second,
All those in favor?
Aye. And then I'll
Do
make
them
a,
individually.
yeah, I'll make a motion to continue FY 26-032.
Second. All those in favor?
Aye.
Aye.
And I'll make a motion to continue FY 26-033.
Second. All those in favor?
Aye.
Aye. Okay, moving on. Any quick comments from the public?
yeah.
I was interested in the tax classification thing. Now, we are very short of revenue in our town. Would it be possible to do a split tax rate a little bit up on the businesses? Now, I know it's the same pot of water. Okay, so that decreases the residents. So they would be happy with that. And then I'm thinking, for example, what about that big building on Route 18? Are they paying tax?
All right, we're not gonna ask questions, so if you have a comment, make a comment, but if you do have a question, email Justin and he'll get it to Lori.
Okay.
Keep it moving.
So my comment is I think we should seriously look at the split tax because residents are getting extremely upset with the taxes. And if we could shift a little to business, big business can do the exemption for small business.
Okay,
No, we're
so
not gonna respond.
5%.
We're not gonna respond. It's just comment period.
Okay.
That's a little fascist, I must say. I mean,
That's how every meeting's gonna be. It's just comment period. So you're not
Why?
gonna make a comment.
according to you?
No,
According
it's
to the
according to
open
the
meeting
charter.
law.
It is.
I'm just keeping it moving along.
Sometimes,
Okay, well.
So you have the
answer
opportunity.
again.
sometimes
Any
Katia
questions?
will, if we have time to answer some questions, but usually we don't. So it is immaterial.
So I would be interested in the small business exemption for our local businesses not to be increased tax burden, just the big guys on Elm Street, Route 18, that kind of thing. Will that make any? No questions. I'm hoping that will make a difference in our revenue.
It won't make a difference. We're
We're not gonna answer any
It
questions.
seems like you're
Sorry,
getting
thank-
two things
Hold on.
confused. Okay.
So we'll go, Mark.
I'm sorry.
I think we seriously need to look at tax rates and business taxes. Be one of them, and I agree on bigger businesses versus, I don't know if you can make change from the, but I'd like to know how, send the question to the town manager.
MJ, any?
I did want to say something, just as an encouragement regarding, accepting any type of tax factor. Pursuant to Massachusetts general law, you must have it done before December 31st. If it is not a tax rate that is approved by the end of the year, the town will be forced to send out what's called a third quarter preliminary bill, and then we would have to issue an actual bill for fourth quarter. It can cause serious problems with DOR, and you could actually have some of your local revenues withheld in that period of time because your tax rate has not been set. And as a result, DOR could look at us a lot more firmly, and we definitely don't need that to happen, and we don't need taxpayers being upset about only getting a preliminary bill. So I would encourage the expeditiousness of getting a tax factor set well in advance of that time frame, so that the town can get its printers to print out the bills and have them sent down on time before December 31st. I know as a collector myself, I prided myself in getting it out before 12/31, so I would encourage the town of Bridgewater to do so as well.
Thank you, MJ. Take a motion to adjourn.
So moved.
Second.
All those in favor?
Aye.
Aye.